What is going on, Alpha Hunters? I'm a little bit pissed off. And that has to do with what I've seen other YouTubers kind of give advice to how to handle the current marketplace that we are in, as we've seen an increase in volatility and those kinds of things. So I'm going to share with you 3 things that I like to do when I'm unsure of the market, or I don't have a clear understanding of what the market is wanting to do. So I was watching another YouTuber about, just dollar cost average down, just keep putting money in as the market continues to sell off, as we saw the SPY kind of dramatically drop over last week. We bottomed this Monday, and now we're seeing a little bit of a bounce. If you've been following me, it's kind of running right along with what I've kind of been expecting. But the thing that I got really perturbed about is we have seen a lot of stocks get hammered over the past year, and even recently, over the past month to really year. And there is other people out there saying, oh, just keep dollar cost averaging down. Okay. I want people to understand that that is wrong. Okay. There is a time to do that, and there is not a time to do that. So my rule number 1 is whenever you invest in individual stocks, always have a line in the sand. Number 1, always have a line in the sand. And this is why, okay? The market does not drop 95%, 90%. It doesn't drop 80%. It might drop 60%. We actually have seen that in the past 12 years, So let me look at the SPY here real quick. I'm going to go back long term, and we're going to look at the financial collapse and how much it pulled back. 57%. I'm not saying we're going to pull back 57% on the S&P 500. I'd be surprised if the NASDAQ did that. I don't think we're going to do that. But we are seeing a massive rotation out of some previously high-flying stocks, like PayPal. PayPal is down massive from where it peaked out, okay? And this is a monthly chart, and it's already down roughly 47%, okay? Now, it's been bouncing, obviously, this week with everything else, but that is a major trend change, okay? It has gone up over the past several years, five or so years. It's up like 906%. So that's on PayPal. What about Square? This is another one that's been getting hammered lately. Square, from its IPO bottom, it's up 3,350% or so. It's about 3,400%. That's where it peaked out at. And now it's pulled back and it's down. It went down 64%. It actually retested perfectly right into this previous all-time high way back here. And now it's been bouncing. It's currently down about 58%. But all that being said, is the pain over? Here's what I'm going to tell you about bubbles, overvalued stocks, major trend changes, and that kind of thing. I know many of you guys out there haven't really studied the markets all that long, and if you have, that's great. You'll probably know a little bit about the tech bubble, as we saw massive pull downs in the tech bubble, right? And the NASDAQ, or the Qs, they pulled back 83%. Now, I don't think the Qs will pull back to 83% from here. No way. I'd be surprised if they went back 40 or 50% from the all-time highs, because back then it was just everything in tech was just so massively overvalued. But here's the thing that I want to get across. If you don't think that your favorite darling stock that has been riding high over the past several years cannot get into one of these type of pullbacks where it pulls back 90 to 95%, I got another thing coming. Because during that pullback for the Qs and the NASDAQ, Amazon, AMZN pulled back about 95% from peak to bottom, and it took about 2 years. It took about 2 years for Amazon to pull back 95%. Okay? So when I see YouTubers out there telling people to just keep cost averaging down, well, when you get major trend changes in stocks and they fall out of flavor, dude, they could be multi-year pullbacks, especially stocks that have been up over 3,000%. And they've been the darling of what has been going on in the bull run over the past several years. So like fintech has been hammered. There's been some other areas that have been hammered. But that's not the point. When you get major trend changes, you don't just cost average down. You protect your wealth by saying, hey, you know what? I've been in for a good run. I'm not going to be that guy that lets it go down or lets my wealth decrease. There are other ways to be invested in the market that you're not exposed to massive downside risk, massive pullbacks. And I think we could see that. And Tesla is one of those where I think we could see some of that. Yep, I get it. Tesla, it's been a darling, and that's the thing, is it has been a darling. Let's see how big this run was over the past couple of years. Oh, up 3,000% in the stock. There are some stocks out there that have seen massive price appreciation. And if Tesla was to come back down and retest into this channel, that's roughly a 90% pullback. I'm not saying it's going to pull back that much. What I'm saying, protect your capital. Don't let some other YouTuber say, hey, keep buying while it's a fallen knife. Like, don't do that. You always have a line in the sand on individual stocks. And if you've been in Tesla and you've been riding it up, your line in the sand for this stock would have been right here under this candle. And when this pattern came in, right here under this candle, right under that little lower wick. And then when it's set in that pattern right there, and now it's kind of like choppy. It seems like it's kind of done. It's like the momentum has slowed massively. And here's the thing: is from the all-time high, if you would have put in a low, a stop loss maybe right there, that's roughly a 50% pullback or 56% pullback. So you always have a line in the sand on individual stocks, because individual stocks are not the market. There are a lot of people that like to take things that work with the market and analogies and practices that work in the general marketplace with the market, and they apply them to individual stocks. And it doesn't work that way. If we go back and look at Amazon, does anybody know how long it took Amazon from that tech bottom, how long it took it to get back to that previous high? So it had that 95% pullback, but it took it from December 99, and then we didn't get back to that price level until October of 2009. 10 years people were left holding bags. What about Intel? Intel, check this out. From the tech bubble bust, it pulled back 83%. How long did it take for it to get back to its all-time high? Oh yeah, it hasn't. It's been over 20 years. Now I get it. If you've been collecting dividends, we throw on the adjustment button down here. If you've been collecting dividends, you are roughly ahead from when you bought at the peak or its peak. And it's up 13%. 13% from its tech bubble high. I'm not trying to be like, hey, watch out. The economy's about to collapse. I'm not trying to be that guy. I'm just saying protect your wealth, because what I've seen other people on YouTube advertise or advise people to do is keep buying a fallen knife and keep buying the bag. Dude, if you've got massive winners, you need to take that crap off or protect yourself by puts, whatever. And if you want to be invested into something, I got something for you. Do you remember when you play Monopoly, those 4 pieces that nobody wants? The railroads? Yeah, let's talk about some railroads. That's my point number 2 here. Okay, this is what you can do when you are unsure of the marketplace and you just need an area to kind of hang out. Okay, so we're still looking at a monthly chart. So I'm going to look at, this is where I like to hang out. CSX, this is a railroad stock. Dude, this is so clear bullish. Like bottom left, top right, long term, easy. It doesn't take it a decade to get back to previous all-time highs. I don't know why I actually got caught up back here in the tech bubble bust, but it's fine. And even the financial collapse, it took it 2 years to get back to its previous high, and they pay great dividends. So you can combo being in railroad stocks. UNP's another one. UNP. So UNP obviously looks very identical. Bottom left, top right, very just steady, easy going. You're not getting crazy returns, but you're getting good returns. You're getting great dividends. And then you can also sell covered calls on top of that. Like, these are great areas to kind of hang out. Another area where I do like to hang out and during uncertain market times, like we are seeing currently, is the dollar type stores. Like Dollar Tree, DLTR, Dollar Tree. Like, it's not like long term, super good, not much downside risk. What was this pull down? 67% during the tech bubble bust. It's not bad, but people have realized over during this period, the reason why it bounced back rapidly over like a year or two, the reason why is because people go to dollar stores when the economy's not good. So these type companies do really good. DG, Dollar General, is another one. It has a recent IPO back in like 2010, I guess. You know, still pretty good. It's had quite a run. This is probably one I'd maybe stay away from. I'd maybe look to go to Dollar Tree, as Dollar General looks like it's had quite a run. Let's look at that real quick. Actually, it's up 1,000%. Yeah, that might be another one I would actually potentially stay away from, and maybe look to go to Dollar Tree or something like that. But I like the railroads personally myself. People move product by rail all the time. Even in bad economies, people are still moving product, and the cheapest way to do it's rail. In one of my previous jobs, I worked with railroads, BNSF mostly, so not CSX exactly, but they all work about the same. If you want to move product by rail, it's the cheapest way to kind of move bulk product across the country and stuff like that. Rail's the way to do it. The third tip I wanted to share is an uncommon position for many people, okay? People feel like they always have to be invested into something. If I got money in my broker account, I'm going to be invested into something. And I can tell you one of the best things to do in uncertain markets, you just kind of want the market to flush out, cash. Put your money just into cash and wait. You don't have to wait for 3 years. Just wait for what the market is, what the market's going to do, or what the stocks are going to do. It's just a way to protect your capital. I get inflation and you want to be invested into things, but what will hurt worse than inflation is buying a fallen knife. And for many of these high-flying tech stocks that we have seen get sold off so much over the past few months, these could continue to see downside. If we have seen major trend changes, right? When was the last time PayPal hit the 50 EMA on a monthly? Oh yeah, it had never done it before. So the fact that it's just now hitting it, and we actually really seriously broke through the 20, which had never really done before. It broke through there, but it rapidly bounced back through. So yeah, we are seeing some massive, massive changes in trends and things like that I think you just need to protect yourself. Go to solid investments like rails. Don't do the high-flying tech stuff that's been there. I think Tesla will get crushed over the next few years, and it's one that I will be continuing to look at to play bearish. I actually like Tesla, the company. I'm more just talking TSLA, the stock. The stock is just super inflated, and it's going to be one that if you're continuing to buy the dip, you're probably going to be bag holding for a while. I mean, Tesla could be one of those 10-year stocks that it takes to get back. Don't be at dollar cost averaging down on things that have majorly broken their trends. And there's a lot of things that have majorly broken their trends to the upside. And this is just where you always need to just have a line in the sand of saying, yeah, I'm out. I might just sit in cash for now. And then, maybe you rotate into solid longer term investments like rail, dollar stores, and stuff like that. And then wait for the market to kind of tell you what it's going to push higher in the future. Okay? And then go into those positions. But don't be dollar cost averaging down on things that have broken. I get over the past 10 years, we haven't really seen stuff like this. I'm not telling you what the market's going to do in the future. I'm just telling you what it has done in the past with super high flying stocks. Alrighty. Good luck out there and take care, Alpha Hunters.